Hello, welcome to today's public session for forex trading, and I am very happy to see you guys. And as well, it's another public session of this month, July. So we have tried as much as possible to always be consistent with whatever we are doing by hosting public sessions whereby people can actually learn about forex trading. And I try to show people how I analyze my trades on every public session right to the point of taking my trade. So I try to explain better market structure, risk management, and other rudiments of forex trading, which will be beneficial to your knowledge. And as well, it's actually a open policy that we operate whereby you can come in, you can ask questions. There are ways whereby you can reach out to me. You can reach out to us through Gmail, Telegram, Facebook, or YouTube. You can watch our videos, and I'm very sure after this public session, we can actually post this session to our YouTube channel where you can watch in your leisure time. So today we are hosting another public session, and uh, and I hope it's going to be very good. We have less time. Today public session, we're going to go deep into the macro economy. So we try to know much about the macro economy. We Let me go to the next slide. Um, So we try to learn more about the macroeconomy, so which is the outline of what we're going to do today. So the maximum time of this public session is 40 minutes. So introduction is 5 minutes, which is already what I'm doing. So we go straight to economy, what is inflation, and we go straight to how government pump money to the economy. Then we go straight to the market. We go straight to the market outlook, then followed by the risk management. We just brief on risk management. Then if there are any questions or answers whereby you can ask, then you can go ahead within 5 minutes. So here we are now. Let's welcome ourselves, and I hope you enjoy this public session. So we want to talk about the economy. We've been trading forex. A lot of traders don't even understand what regulates the economy. They just know they are actually a forex trader. They don't care about the fundamentals. They don't even want to know why is CBN trying to bring up a lot of policy that will actually control the money flow in the economy. And they don't want to know how government is actually pumping money to the economy. They just want to stick to the technical analysis, your buy, your sell, your liquidity area, your change of character, your order block. But we're talking about a currency. Without currency, the economy is shutting down. So this currency is what lead to buy and sell. You understand? Is what lead to what market is the breadth of the market, the exchange of currency from one person to another in order to execute a trade, in order to execute a transaction, is what bring about the breadth of the market and as well of the economy. So what is economy? An economy encompasses all the activity related to the production, consumption, and trade of goods and services in a country, which summarizes the total gross national production of a particular country. So if I use my country as an example, Nigeria, so the total consumption and production of all the companies in each sector that we have in this country is how they are actually productive, is what brings up the total gross domestic product. Sorry, sorry. So it's what brings about the gross domestic production of the economy. So, and that is what leads to price. The total activity all over the total spending all over the total activity in the economy is what bring about price. And the increase of this price is what leads to inflation. So now, the gross national production of a particular country is what is bringing life to the economy. Let's take an example, the manufacturing sector as an example. If government brings up a policy or a program that they want the manufacturing sector to produce as many as they can, so they would need to reduce interest rates or bring up a lot of programs that the manufacturing companies that are manufacturing rubber, biscuits, or whatever thing they are manufacturing in that sector, they would actually take a grant from the government, they will put money into the business, they will increase the productivity of that business, and that will increase the productivity of that sector. And in respect to that increase of that productivity in that sector, it will increase the productivity of the entire economy in that country. And the manufacturing sector will contribute probably more than 50% if they spend enough money in that sector. So that is why we see that okay, that the manufacturing, that's why we see that the manufacturing companies, they will as much as possible to increase their productivity. And once they increase their productivity, it brings about income. So now, if we look at GDP, GDP brings productivity, that's the gross domestic productivity. GNI means gross national income, and the market activity, it means transaction. That is, I buy something from you, you sell something from me, the exchange, the what we have actually done together is what we mean by the transaction. Now, the National Reserve is the foreign currency. The National Reserve of Nigeria, we have the US dollars, we have the pounds and everything. This National Reserve is what the government use to do other businesses that are not in our currency, but in other currencies, in order to pay maybe other liabilities or importation of goods or fuel or other things. Likewise, these are done in other countries the same way. So now let's look at this. The total spending all over the total activity equals to price, and the increase of this price, which is growing faster than the productivity, is what leads to inflation. So that is exactly what we have been trying to say every day. We hear about inflation, 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 inflation. If the price of a particular commodity is growing faster than what they are producing, that means that the demand is more than the supply. We would expect inflation to happen in the economy because what people are actually demanding to buy from this sector is more than what the sector is actually producing. So at the end of the day, we would have increase in price, and the increase in price will lead to inflation. People will start shouting that the economy is everything is increasing, food price is increasing, housing is increasing, mortgage rate is increasing, and other things will keep increasing. So these are what leads to inflation. So as well, let's move to the next one. Now, what is inflation? Inflation is the rate of increase in prices over a given period of time. Inflation is typically a broad measure, such as overall increase in price or increase in cost of living in the country. In short term, inflation grows faster than productivity. That is, income growing faster than productivity is what leads to inflation. So how does it affect currency trading? After everything we've been saying, how does all this thing affect currency trading? Does it affect me? Does it affect what my analysis? When we hear about the government, the CBN governor trying to say, okay, the Federal Open Market Committee say they want to review the interest rate. So the meeting they are going to do, if it's positive or negative, is going to influence whatever strategy you are employing to the market. So that is why you see that you check your what's the name of the site now? So you just keep my mind. So that site is where we used to check news, and that news, if there is a red folder in that news, there is high impact that is going to influence the currency market. So now, how does it affect the currency trading? Demand of currency, it increases productivity by spending. Demand of currency, it exchange of other currencies, and demand of currency for domestic or foreign use, e.g., travels or school fees. Also, simply put, good economy equals increase in value of its currency vis-a-vis. Likewise, decrease in value of a currency is a bad economy. So that's just what it means. So with this, you can understand why the economy is actually being regulated. You can understand what is actually moving on in the economy. Increase in price leads to inflation. And what can lead to increase in price? When there is no much productivity in the economy, whereby people are demanding more than what the sector is producing, or more than what the entire economy, what the entire sector is producing, it will lead to inflation. People are demanding much oil, but there is no much oil for us to produce. There will be increase because what is left is what we want to sell. So we will try to increase the price so that we can actually give it to the buyers that are really, really interested in the business. So that is what affects currency trading. So when people are demanding much currency from the country, for example, people living in a particular country to school in another country, they would need a currency, US dollars, to exchange their currency in order to pay their school fees. People traveling for holiday, or people traveling to see their family in overseas or any country, you will need a currency for you to exchange so that you can transact that business. So people also use currency for a lot of things. So when there's demand of this currency so much, it leads to outflow of that currency and the inflow of the other currency. So we expect the foreign reserve to, the national reserve to increase, and because there is inflow of other currencies, but there is outflow of your whole currency because there is exchange. So with that likes, so there will be increase in the demand of the currency when people are actually demanding much of the foreign currency than your whole local currency. So that will lead to also increase in the exchange rate. So sometimes governments really do this in order for them to actually slow down the exchange rate market so that people will not demand so much of the currency if the national reserve is actually dropping or is actually reducing, so or increasing. So let's just put a stop. It is more complex than this, but I hope you enjoy this part. So in the shorter time, what we can do now is for us to move into the market outlook. So I will move straight to how we analyze the currency market, and from there we can roll on. So I would like to share you a video whereby you can watch, and we'll kickstart from there. So let me play the video.
Forex or the foreign exchange market is a global market, no physical location. It allows investors to trade through and to exchange one currency for another. All foreign trade is fair. So, for example, if you want to exchange your euro for US dollars, the currency pair trade is euro USD. Trading currency implies that a trading single page like one currency like selling value of currency trade every single moment throughout the day. Simple supply and demand dictate. The reason, and that's the reason why you and more transactions are more flexible. So why does forex trading become so popular? Well, it's the most liquid of all markets. So it's to buy and sell anytime, anywhere. Never gets stuck with a currency. There will always be a buyer and that's a great advantage of currency trading. It operates 24 hours a day, 5 days a week. I think all the information transaction costs relatively low, and there are over 100 currency pairs. What else did you understand currency pairs? What's important is that in the forex market, there is a trading opportunity for more investors.
So we welcome back to the analysis. Sorry, it's time for. So this is where we are. Actually, this is my own analysis. So I want to go straight to the analysis that I've been doing. So let me just pick any trade of my choice. So let me pick USD JPY. So you can see the chart is new. So from this, I want to start my market analysis from the scratch up to the point of my head trade time frame. So what I do is that I consider going to my monthly time frame. So I move to my monthly time frame. I try to, I have analyzed this trade. So sorry. Okay, let me pick another one. Let me pick another one. So let me pick USD card. Let me see USD card. I don't want a chart whereby something is on it already. All right. Oh shit. Let me see another one. Okay, let me see card. All right, so this is a currency pair that there is nothing done on it. So I want to show you how I take my trades. I go to my monthly time frame. I look at my highs, at my low. That makes me to understand where I'll be trading and where most of my activity will be happening. So by going to my high and low, I recognize I can take it from here. The market sentimentally, the market is a downtrend. So I don't need to disturb myself because it's a downtrend. So from this high, I know I have a low, another high, and I have another low. There is a break of structure here. So I can quickly identify here as a break of structure. So because I know there is a break of structure here, which is a supply level. So I know I have a low here. Then this high has not been taken out. So, but I have a low here. This is a high, this is a low, this is a break of structure. So this high has not been taking this high. Likewise, I still have this high. So, but I have another low here. Having another low here, everything is respecting this place. So I don't need to stress myself. I'll just come down here and recognize my supply level. So I'll take this as my supply level because this is my lowest low so far in the month. And there is no other low apart from this. Then I'll take my highest high. I can take this as my high because just this drop is a lot. So I can take this as my high and I can also take this as my high. So if I want to also recognize this, I can take it, I can find a way to recognize my resistance. I can take this as my resistance. I can also take this as my resistance. So that means this is all I need in my monthly time frame. I have already understand that I am already on a weekly, I am already on a downtrend sentimentally. So what I need to do, I go to my weekly time frame. For my weekly time frame, I want to understand what is happening in the market. I can shrink my market like this so that I can see the whole structure. My market structure tells me that this is a high, this is a low, this is another high, this is another low, this is another high, and this is another lower low. Another lower low, and market is making a series of lower low. So where am I in the market presently? This is where I'm high. So now, for me to understand that what is really happening, this high has not been taken, this high has not been taken, likewise, this high has not been taken, telling me that I am already on the downtrend. So what I will need to do is to recognize another high, a resistance, so that I can move closer to my price and I can understand exactly what the market is doing. So because I'm moving closer to my price, I want to know where the market is moving next. I already see that this market is already on a downtrend and is trying to trade up from my lowest demand. So I will try to understand each structure here. I will pay close attention to what each structure is telling me here so that I will know if my high will be taken out by here. But I want to let you understand that it will take a series of weeks before this candle can complete and as well take out this high. So what I will do is that I will zoom out, or is this zoom in or zoom out? So I'll try to zoom in so to understand exactly what is happening in this place here. So is there a break of structure? That's what I'm going to ask myself. Is there another block? Is there, what kind of other block it is? And is there a balance? So if this questions has been answered, I can say that this demand, my supply, my demand or support level is very, very strong. then I should expect a break of structure here. But because I can't know exactly what the market is doing, I'm a day trader, I will move closer to the daily. Since I have already recognized my resistance or my supply, and I've recognized my support or my demand. So I'll move to my daily and I'll start my very analysis. Because I have already understand from my monthly to my daily that I am already on the weekly, sorry, I am already on a downtrend. I don't need to disturb myself. And I have already understand that this is my lowest low, this is my high again, and this is my lowest low from the monthly. Every of my analysis must comply with where I have been coming from. If they go against it, that means I am going against my analysis. So because I am already on an uptrend in my daily, this is where I am presently. I want to understand where there are imbalances, where there are maybe weak points in the market that I can take advantage of, and I can as well know exactly where the market is going. So what I will do is that I will read my chart that this is a high, this is another high. I can I can draw a trend line and connect my trades together. Sorry, I don't like this. So I want to connect my trade together. I can take it this way. So every past reaction also dictates something that there should be another thing that is going on. So what I will do is that this whole structure, I want to understand the source. This is exactly from my monthly. I want to go back to my monthly and see what kind of candle is this. So from my monthly, and I know that the month has closed yesterday, this is signaling an uptrend. If at the end of this month, I have this break of structure up to this point, let me use my annotation. If I have a break of structure up to this point, mitigating this level, I should expect a break, a pullback to come to this level, and I should expect a continuation to the upside. But there is a series of liquidity here that you need to pay close attention to. So now, this is where we are in the market. So what do we need to do? What we need to do is that we need to pay close attention to where we are actually going. So I'm going back to my monthly since I have already seen that candle that is a bullish candle. This tells me the whole thing that here there is a resistance that got broken. This is where the candle closes, and I should also respect that there is also a supply level here that got broken. This also tells me that at this point, market is making correction, and I should also respect that here is a supply level. All this is telling me that this is a confirmation that I am ready to go uptrend. So now, market is presently here. I can tell myself that here is a resistance that market has already respected, and I can tell myself closely when looking at everything that this market has been respecting trend lines. One touch, second touch, third touch. A massive drop here, another massive drop from this trend line. So what should I expect? I should expect a massive drop. But because I have a break of structure here, I need to be very, very careful, and I should expect something should happen here at this point. I should expect something should happen there at this point at my signal, because there is a bunch of liquidity sitting right here. So I can move to my daily after identifying my order block. I can move to my 4 hour and see exactly what is really happening. So from here, I can trade this time frame. I have a support level here that is yet to be broken. So let me clear this. I have a support level here that is yet to be broken. I have the support level here that is going to be broken. So I'll wait for how price is going to react here. And remember, there is another block here. There is a zone here. So I will watch how price is going to react to this zone. If my price reacts positively, I can take this into a line chart and see exactly what is happening. So from here and here, I can see that, okay, a liquidity level should be grabbed here. So this is how I take my trades. A liquidity level should be grabbed there. I can take this into a candle again and see that, okay, there is a bunch of liquidity sitting right here because of this candle. So I'll pay close attention to see how my price is going to react here. If my price reacts here and it's still moving back, I should expect a break of this trend line. But if I don't expect a break of this, if I didn't see a break of this trend line and I see my market trading around here, I should expect a sell to this level because there's a bunch of liquidity, a bunch of stop losses sitting right here. So it's just that you need to ask yourself, what are the qualities of the liquidity? What are the qualities of the liquidity area? And what are the qualities of order block? Once you understand those qualities, you should be able to pick your trades. So for me now, can you see that I want to make a sell after anticipating my move here, that I can see a break of structure here from the daily, and I can also see that this candle is a complete bullish candle from the monthly, which signaling an beginning of an up trade. That is confirmation number 2. Confirmation number 3 is that a bunch of stop losses is sitting here, which the market players might actually push the market to clear out all the stop losses for another move to the upside. That's confirmation number 3. So for me to sell to this level, let me look at how many pips is going to take me to sell to that level. So short. So if I short from this place to this place, I just want to look at the. So I should be having minimum of 161 pips, 8 pip debt. So can you see 161 pips, 8 pip debt? So let me download this image. So I should be having 161 pips, 8 pip debt. So what do I need to do? What I need to do for myself is just very simple. I want to take this trade. How do I take the trade? Now, I will move close to my 1 hour because I have recognized my support level. Because I have recognized my support level, I can shrink my chart. I have recognized my support level. I can see how my price is reacting to this place. I should expect a clear out of all liquidity. There is a stop loss here. There is a stop losses here. There are stop losses here, which is a strong demand level from the 4 hour. So I can expect how price is going to play out here and find my order block in my 1 hour because I want to trade in 15 minutes. So I'll find my order block around here. I'll probably find my order block around here. So because there is a zone here that I have seen. So from here, I will go to my 15 minutes and I will wait for price to play out. So after having seen this, can you see how price play out here? You can see how price is actually playing out to my support level. So if you want to take this trade, you can still take this trade. After which market opens, you can place your stop loss here. Let me see. So from here, I can place my trade. So from here, I can place my trade. Let me see how many pips is going to take me. So let's assume that I place my trade here and I put my stop loss here. So I'm risking just 8 pips and I am taking profit of, sorry, please. So I am taking profit of profit number 1. Profit number 1 is 25 pip. So profit number 1, 25 pip. Profit number 2, 58 pip. And profit number 3 is 85 pip. So at the end of the day, you take the trade and you take another up trade. So sometimes things might not go the way you expect, but what do you have to do? You just have to keep moving, readdress your strategy, and see where exactly you have done something very wrong. So by the time you address those areas, you begin to better yourself. So the next outline here is I want to talk about risk management. So risk management is just very simple. Risk management is by risking little of your capital. Is more than this. About mentorship, I usually talk so much about risk management, whereby you can actually risk very little of your capital. Whatever you are risking that is taking your emotion, you are not yet a trader. You must risk something that will not affect you emotionally, something that you can let go easily and say, okay, I will try again. But if you trade, you risk something in whatever business you are doing, you must make sure your risk assessment is at top notch so that you can actually see a lot of opportunities that you can actually go for. But if you have already risked what you have or what you have, when you see some opportunities, you won't want to go for them because you have actually risked everything. So what I would advise is that you risk 1% of your capital per trade. By risking 1% of your capital per trade, you would have gone far. And at the end of the day, let's take, I'm trying to try a marker here, but I can't find a marker. I don't know if this. Okay. So let's assume that you take 5 trades week 1. You take in week 1, you take 5 trades. So out of that 5 trades, you lost 2 trades and you won 3 trades. Let's assume that your capital is $5,000. So $5,000, let's now risk 1% of $5,000. And your risk ratio, let's say your risk win to lose ratio is 2:1. So I'm talking about risk assessment, risk management. You lose 2 trades, you win 3 trades. So now, if you risk 1% of $5,000, you've just risked just $50. So 50 times 2, you have $100 risk for the week. Now now assume you win 3 trades, you got 2% of that trade, of that capital per trade. 2% means $100. 100 times 3, that's $300 for the week. $300 minus $100, you have $200 profit. It's very, very easy to say, but it takes discipline to work on this. So what I would advise as a trader is that you risk something that will not affect you emotionally. And that is, though in my mentorship, there is a way I break risk management down to the lowest, that your trade per day, there is an amount of risk you should risk per day. There is an amount of risk you should risk per week. There is an amount of risk you should risk per month. You should have a profit target at the end of the month. Then you divide it by the numbers of your days that you want to trade. So this will give you what you should be risking. So this is just a tip, but there are more to this. It is more complex than this. I am assuring you that it's more complex than this. But what you just need to do is that what? You need to keep finding your path and you keep enjoying it. So this is where I can stop for today. And I hope you enjoyed this public session. So in any time that you want my help or you want information about my trading, so you know, this is just what I felt I can give. So if you want more, you can log in, you can call me You can send me an email. You can send me a message on Telegram or Facebook or YouTube or WhatsApp this same number, and I will see you next time. So don't forget to subscribe. Don't forget to like. Don't forget to share. And I hope to see you soon. Thank you and enjoy your weekend. So my name is Bobby Delay, and I hope to catch you later. Goodbye.
Well, $5.3 trillion of trade every day. But it's quite the size. Forex or the world exchange market has